One of the big news items of the year, potentially, CFR Pharmaceuticals has announced an increase in the acquisition offer to Adcock Ingram from 73.51 Rand per share to 74.50 Rand per share. Joining me on the line now to discuss this is Mark Ingham, Director of Ingham Analytics. And at the desk with me is Wayne McCurry, who is the Head of Portfolio Management at Momentum Wealth. Mark, let's start off with you. Just this morning, you released a report regarding the deal as well as the potential voting that would have to take place next week, Wednesday. And now a surprise move by CFR. Are you surprised by this, perhaps?
Well, it's come at the 11th hour, if you will, and what it amounts to is shifting of the deck chairs on the Titanic. The purported increase in the offer is really part of a smokescreen. The delay of the purported higher offer and Bidvest being brought into the equation in quite some depth in the SENS release is really a smokescreen. So I think there's a face-saving aspect to this here, and they're pretty much kicking the can down the road for the time being.
Well, they've increased the purchase price but not changed the funding model. That has also been a key concern in your report regarding the deal.
That's right, the funding model. What they've announced is not consequential. My concern has never been the amount per se, but it's the financial implications and the high risk and the uncertainty associated with it, and more particularly the implications after the fact, down the line, if, for instance, a deal like this went through. So nothing has in fact changed in that regard.
Mark, why did they even bother? I mean, surely when you sit back, as you correctly mentioned, at the 11th hour, and you see, maybe it's not going away, they haven't got enough proxy votes in, they're worried about the meeting, they're worried about Bidvest. Why don't they up it by 5%, 8%, 10%? Why? I mean, how on earth do they think it's going to sway the market by upping it, under 2%? Essentially, it's nothing.
Correct, and that's why I presaged my remarks with the shifting of the deck chairs. So in fact, Wayne, what they're doing is putting stumbling blocks in front of themselves. And I think by coming out with what they've come out with this afternoon, I think it further undermines their case, because you really cannot take this seriously.
From a shareholder perspective, Mark, I understand the meeting that was due to take place next week, Wednesday, has also been postponed, and we'll hear of that date sometime in Jan next year.
Which further adds to the uncertainty, the time delay, there's a time value of money aspect here. We await and see. But my reading of this, Wayne, I'd be keen to get your take on it. But my sense is that if we put all this into the mixer, this deal is really unlikely to fly.
No, I must say, Mark, I agree with you. There's no ways you react like this if everything was going your way and you had all the votes necessary to push it through. I agree. I don't think this is going to fly. Well,
we'll say goodbye to Mark now for a moment, and Wayne, just delve into the markets a little bit further with you. Coming back to this deal, clearly shareholders won't be convinced that CFR is actually serious about purchasing a stake in Adcock.
No, look, I think they're very serious. They just might not be paying the right price and giving the right deal and giving the right amount of cash versus shares. CFR, I mean, everyone's looked at CFR and they've studied what publicly available information there is, and obviously all the fund managers have done their due diligence, but we don't really know the company. I mean, you can read up a lot about it, but you never heard of this company before the deal came. So I think that automatically makes people a little bit cautious to take shares, whereas when Bidvest comes, every analyst in the country knows Bidvest, know what you're letting yourself in for. So it's a proper offer by Bidvest, and it'll be seriously considered. And I don't think the Adcock shareholders, the Adcock management and the whole promotion of the deal have really sold it terribly well. Adcock, as we all know, has suffered, has had a tough time since being unbundled from Tiger Brands for many and varied reasons. But ultimately, if a company underperforms, it's ultimately management's responsibility. I mean, you can have lots of reasons, lots of things that have gone wrong, lots of stumbling blocks, but if you underperform for a sustained time period, you have to question management's ability to actually pull the company right. And we certainly know that if Bidvest came in there will be a management shake-up, and maybe you'll get somewhere. But we'll see what happens. My instinct, and I agree with Mark, my instinct is I don't think this one's going to go.
So the changing of the deck chairs on the Titanic is not going to work at all.
Fly.
So what does it mean for Bidvest, perhaps? Because they did put their cards on the table.
Yes.
The board rejected it, but shareholders still have to...
No, shareholders have the ultimate vote. I mean,
Exactly.
shareholders have the ultimate vote. Yeah.
Could this swing in Bidvest's favour?
Oh, definitely. I mean, shareholders will vote. The shareholders are completely independent of what the directors and what management think. Shareholders are, they will have the ultimate say, and they always do have the ultimate say.
Another corporate story that came out today was PPC Cement, the acquisition of Safiga Cement, unconditionally approved for the moment by the Competition Tribunal, but from the company's perspective, this is a good move on their hand, as they said, will expand their territory.
Very much so, yeah. Look, PPC actually hasn't done too badly. I actually thought they'd suffer a little bit more because there's big overcapacity at the moment, but maybe there's some projects coming through and they need they see a bit of take-up, and of course it does expand their footprint quite dramatically. So I think it's a good deal. If I remember correctly, it's a relatively small deal. I don't think I can't remember.
69.3% stake in Safiga, yes.
So I don't think it alters PPC's, the company's, the nature of the company, but I think it is a good deal for them. We actually like PPC now because it's actually performed quite well during a tough period, and hopefully there's a better future ahead if we believe
the infrastructure projects.
Well, we're waiting. When we're waiting, we'll see what happens.
Well, definitely time to get in, perhaps. I can't run away from this topic regarding tapering. We've heard it day in and day out. I'm sure it's your favorite topic, perhaps,
I can't wait to talk about it. But look, maybe a different glance, a different stance on it. The US long bond 30-year is almost 4%. It hasn't seen 4% for a sustained time period,
This indicates confidence in that economy.
It indicates there's some degree of normality returning to the US market. Now remember, it's 4% with all the money that's being thrown at it. So it shows you that the underlying economy is okay, it's fair, it's not great, but it's there. And the reason why I mentioned normality, this whole throwing money, this whole liquidity is abnormal. So the moment the economy returns to normality, they've got to bring the tapering, and I think there'll be a definitive statement next week because everything in the US economy is pointing towards that. And that's why we're seeing market weakness. I mean, the market fell, 2.5%, 2.7% yesterday. Today it started up about 0.5%, 1%. And then it was, literally half an hour ago when I last looked at the market, it was down 0.5%. Now it's more or less even, roughly speaking even. But the share markets realize this. And I don't think we're going to have a good January and February on the share markets. I think we're going to continue to see not necessarily a collapse, but this sort of slide. Look, yesterday 2.5% is about as bad as what it gets in one day. It's actually quite a big fall.
Do you believe that we factored this in, perhaps, or are you worried about the South African economy?
I think the US markets have by and large, the share markets have by and large factored in. The bond markets haven't yet. I think the bond rates are going to go higher. Our share market hasn't factored in. The valuation is just too high. It's in the rand. So when tapering happens, I don't think we're going to see the rand collapse because it's already collapsed. But we could see quite a bit of weakness on the share market. I'm surprised, maybe it was the stronger rand, but I'm surprised that specifically Anglo-American and some of the other resource shares are showing as much weakness, because if you follow the argument that the world economy is doing better, it should favor the resource shares. But I mean, it's only one day's movement, so we see what happens.
Wayne, I can't let you go without touching on the platinum sector. Lots of news and a new buzz coming through regarding the labour situation there. Northern Platinum having to take out a loan because of the losses that they've experienced. Impala Platinum wage negotiations not going anywhere at the moment.
Yeah, but Amplats is settled.
Amplats is settled, yes. But AMCU now being given permission to strike at Lonmin next year. So
now look. Maybe take a step away from the platinum sector. If we want the country to be successful economically, we've got to have a common purpose. All major power groups, if you like to call it that, must say, have a common goal of getting economic growth up. So in other words, we have got to stop these massively militant and almost continuous strikes. The country cannot grow at its potential, and it cannot create jobs unless we sort it out.
Do the unions know that way?
It's going to take a concerted effort by all parties. Maybe we're just now blindfolded by the election coming up and no one's going to do anything to upset the apple cart before the election. That's unfortunate, but we just have got to say, chaps, we must sit down and we must say, right, what do Labour want? Do you want more money? Right, you must get productivity up. They must set goals before we pay more money. Mine management, you're earning too much money. You must take a salary cut. You can't earn 40, 50 million rand and the lowest paid gets 3,000, 4,000. That can't happen. And government's got to stop legislating. They've got to keep the playing fields level. They've got to set the rules and not change them every month, because you never know what new legislation is coming. We've all got to sit together, and because otherwise truly our economic outlook is really poor, because at the end of the day, as a country, our only real competitive edge is mining and commodity export. That's the only real competitive edge we've got. And if that just languishes and doesn't grow, we're never going to get anywhere, quite frankly.
Very quickly, that Constitutional Court ruling regarding the binding rights for Kumba, that clearly adds certainty to the market.
But now there's a good example. How long did it take for this thing to be resolved? I mean, ultimately the outcome, you all knew what the outcome was going to be, but the mere fact that it took 4 years and you had Imperial Count Trading and they owned the share, then they didn't own the share, and then ArcelorMittal bought them, then they didn't buy them, and then this party and that party and the DME. I mean, it was just a complete and utter shambles. So we've eventually get to where we should have been right in the beginning, but it's taken 4 years. But it is a good ruling. It really is a good ruling.
Some liked it.